What's up, coin traders and algo fam? How we doing? Checking out Algorand ALGO on that ticker. Been a couple weeks since we had a little update, still in this longer term period of consolidation here. So just going to be expecting a breakout at some point. Little bit of things to be looking for, and we're actually looking at a lot of bullish things, believe it or not, because what we actually have, first of all, let's go ahead and talk about this trend line that we actually broke bullish from. So as you can see, we had a very big downside resistance trend line that was previous support, previous support, previous support, broke bearish, finally flipped it into resistance, which also aligned with a lot of these periods of exponential moving average resistance as well. So we did break bullish on top of this trend line as well, and actually broke bullish on top of this 50 period exponential moving average. Now the bulls did actually give it back, and we are still dipping from there, but nonetheless still broke on top of that, and then a pullback and retracement, back testing this trend line, and then also actually maintaining a higher low. So still a pretty good sign overall. So could still see prices tighten. The next thing I do want to actually point out here, and let's go ahead and clean this up a little bit more, is that if we go ahead and look at these exponential moving averages, and let's go ahead and turn off the 50 for a second. Specifically, just want to look at the 12 and 26 here, because typically when we actually do find a pullback where they are established as resistance, and especially now that we did break bullish and then finally broke bearish again, what happens in this instance is that these exponential moving averages get extremely tight and close together, which is exactly what we're seeing right now. And typically this doesn't usually lead to a big sell-off type event, especially when overall we are breaking bullish from other downtrend lines as well. But overall for the price, still looking at a pretty tightening solid channel. So we're looking up overhead closing resistance just shy of the 20-cent psychological level. So we know that 20 cents is definitely going to be a big resistance point. And then down on the support, we're also looking at big support coming in just above the 18-cent level as well. So a pretty big channel and zone here that we're going to be looking at. So this is going to be our big points that we see, whether or not we can break on top of this resistance point or actually fall below this support point. That will indicate direction of the trend. And then we also have to be very mindful of these exponential moving averages as well. So now I want to talk about price level volumes for this zone overall too. So for that, need to turn on VPVR, volume profile, visible range here, and actually look overhead. So looking to the right, big point of mass coming in right around this zone. So you can see that the big part of mass comes right around the current price level, just below the 19-cent mark. And then we pretty much go all the way up until the low 20-cent level as well. So obviously with all of this big consolidation happening in this zone, looking left, big periods of consolidation and price action and trading in this level, looking left, still. So we know that 18 to 20 cents is definitely a huge zone that we see play out based off of historical trading, but also in the current setup as well. So ideally, if we can see a nice bullish break, we would see higher highs playing out pretty quickly, more so than what we've experienced here in the last couple of months since about the middle of April. So overall, like we mentioned, going to be looking at these exponential moving averages. The tighter they do get, the more in favor for bullish upside it does equate to, because typically if we do find a lot more selling pressure, we don't have these actually make a full bullish cross or even get that close together just before rolling over again. But like we mentioned, that is where it is going to come down to the price levels. And then also we actually have a pretty nice trend line for support as well coming in. So if this does break and also the price level does break, that's going to be a pretty clear sign that we're going to head to lower lows here and likely going to experience a lot more downside pressure, especially since we have been in an overall nicer consolidation pattern here over the last couple of months. Now, overall, things have been pretty boring, so that is why we're going to be looking at the longer term chart, the weekly right now specifically, and did leave the resistance and support lines up right now, just specifically because I want to look at the overall current scenario here. And do want to point out on this weekly that we actually did have this trend line for support, which has now broken. And we actually, so this is when we broke it on the bearish flip, rejected from these exponential moving averages and this price level resistance on the close for the weekly. And then ever since, week over week, have been testing not only the trend line and the price lines, but now we also have weekly exponential moving averages as well. So if we go ahead and clear up this chart here, we can actually look at these exponential moving averages specifically, because right now we've been getting resistance from a lot of them, all three of them, in fact. And so especially since they do line up with the 20-cent psychological price mark, that is why it's actually going to be so strong and important once the bulls actually knock out that big resistive level, because that's just going to compete with all of these resistance points from not only trend lines, exponential moving averages, as well as price levels. And with down here on the decrease for selling pressure, we can think, especially unless we get a lot more increased selling pressure and bearish volume coming in, that a little bit more likely in favor based off of the rising crypto space sentiment and kind of the lull in the space for the last few months here, that we are going to be expecting a little bit more of an upside move and a little bit more of a pop. But with Algorand, we are looking at a lot of upside resistance that it is going to take to actually break that. But now the thing that I want to look at too on this weekly chart is just how long we actually have been maintaining closing support for the weekly on top of 17.47 cents. So ever since we had the big bearish capitulation candle, which did start on the 8th of April, so 2 months now that we have been sitting on top of this big support level, unable for the bears to break it, especially as we can see minimal selling pressure, looking like selling pressure has been exhausted. So obviously, despite having big upside resistance, we know that maintaining such a strong level of support for just as long is still extremely effective too, and especially if we can maintain a higher stair-stepping pattern, kind of like what we're doing in the current week. The more we actually see support on top, this longer term support level, that is going to get a little bit more favoritism towards a bullish scenario in this instance. But obviously the bearish case to that too would be that if we do actually see a break below and close below this extremely strong support line, that would actually be a pretty big indication that likely in this instance, we're going to see this being the trend top coming in, and we're going to be experiencing a little bit more lower lows and looking for some further downside supports. Not necessarily the most likely setup right now in this instance, but that is a scenario and setup we definitely have to be mindful of, especially in all these market spaces where we are a lot of uncertainty. But like I mentioned, after several months of just kind of sideways, boring, nonetheless action, especially after pullbacks for about 50 to 60% for most of cryptos, and with Algorand, we were looking at 55% of a pullback. To current prices, we're looking at about a 43% pullback from the trend high, which did come in at 32.96 cents. Now, in the previous video, we talked about how negative it was that one bearish candle, especially with such minimal bearish volume, could actually knock out the bodies of 3 bullish candles on this weekly chart. But the current scenario, we're actually looking at a little bit more of the opposite here, where we actually have one very nice bullish looking candle. And it's not necessarily that nice, but you know what I'm saying, where we actually have the body of the previous bearish weekly candle actually sitting inside about half the size of the body of the previous bullish week. Obviously, decreased volume. So volume last week that closed 52.412 million. And on this nice bullish candle had a little bit more increase. So we were looking at volume being about 96.961 million. So now do want to pull up the technicals here and actually talk about stochastic RSI, because right now we are seeing stochastic RSI well below the 20 line and also in a very nice bullish cross here with a widening gap. And last time we did see these was about a year ago, last June in 2023. We were about the same, obviously didn't get down quite as low on that move, but still nonetheless being that far down below the 20 line and seeing a nice bullish cross. Sort of a similar type pattern with a couple of differences. We were sitting in more or less a sideways type consolidation pattern for a little bit on this rally to the upside. Broke down bearish a little bit, but mostly after that it was upside. So still could get a little bit of that in the current, where we could actually end up breaking, and then before returning to our rally. Definitely a very nice and probable likely scenario given historical patterns that we have seen out of Algorand here. But obviously, like I mentioned, so much pressure on all these upside resistances, whereas we didn't have that before. We were a lot more in a longer, prolonged downtrend, versus right now there's a lot more bearish pressure and tests on all of these upside resistance points. So we know that the more time that we test a support or resistance level, the more likely it is to break. So since we have been seeing prices just getting smashed up continuously, not only against this support line, but also against this resistance line at the 20 cent mark as well, we do know that there is going to be more opportunity for that to eventually break, especially when we do look at having nice technical indicators that do hint to a little bit more of upside bullish momentum. Now, do need to point out kind of another bearish thing. I'm going to go ahead and invert this chart here, because if we actually look at it from an inverted perspective, and we talk about how this chart would look if we actually had a bear pullback, rejection pullback, and then finally a bullish break on top of these resistance lines that are now going to be forming tested support. Typically, we would think, especially in consolidation, that this would lead to a little bit more of a bullish breakout. And so that's why if we actually go ahead and re-invert it, you can see that that does lead to a little bit more bearish pressure and sentiment coming in just based off this overall setup. So that's kind of another reason why we actually have to be extremely mindful that there is still potential of a little bit more bearish downside action, despite week over week having higher lows on this overall weekly trend chart. And so that's why it is going to be so key and critical for the bulls to actually break and hold a close on top of that 20-cent level. So overall, still hasn't been a ton of really good, exciting stuff happening in crypto, and we're kind of just sitting low and idle. But that is typically what happens around this stage of the market if we base it off of a 4-year cycle. And yeah, hopefully plenty of things to be considering and mindful of as we do look ahead to the future of this Algorand chart. And so yeah, with that is going to go ahead and wrap up our show for today. Hope you all enjoyed. If you did, please hit the thumbs up, like, and subscribe, and share if you have not done so just yet. Do appreciate it. Also, make sure to drop me a note, questions, comments, issues, disagreements, all that stuff down in the comments sections below, or feel free to reach out and quote on Twitter at @coin_trades is the handle over there. Looking forward to chatting with everyone over on Twitter or X. So yeah, with that is going to go ahead and wrap it up. Do appreciate all continuous love and support. As always, it does mean so much. Stay safe, take care, coin traders, and I'll catch you back in the next video.